Hi everyone, welcome back. This lesson will take a look at basic market structure and how to use drawing tools to start to create lines of support and resistance and trend lines. Here's an overview of the lesson. We'll go over what basic market structure is, including what support and resistance zones are, trend lines, and how to use them to inform your analysis, and how to incorporate all these concepts and implement them on your TradingView or other charting tools. So let's first start off with what support and resistance are. So the price action of an asset rarely stays constant or within a range. There will generally be price movements up and down within an overall larger trend or an overall market cycle. So prices of an asset, whether it's certain equities, commodities, or cryptocurrencies, rarely just stays flat, right? Typically, there's movements in a direction, whether that's up and down in an upward movement or up and down in a downward movement. Support or support levels refer to a price point that may be frequently reached when price action reaches a low. Now, this price floor can be caused by strong buying pressure at that specific price area. Support levels can be thought of as a point where price can only go lower with very strong selling pressure. So imagine there's this imaginary line, this supposed price floor, and price can bounce up and down and may come down to it, but really does not break past this level or past this line, if you want to think of it like that. This is a level of support or price floor. Now, generally, when we think of levels of support, we want to try to find these levels and identify them that are made up of 3 or more previous lows near that same price range. So price can come down to this invisible line, and for it to be considered a significant level, we want to look for 3 or more previous instances where price came down to it and did not fall below it. Essentially, price came to it and bounced off. Price came to it, bounced off. Price came to it, bounced off. And the more of these touches that we see, the more significant we could say that level is. Now here is an example of support. So let's say these are just bar charts, candlestick charts, and we don't necessarily need to know the time or the valuation of the asset. More importantly is the trend or the shape of the pattern, so to speak. So price came down here, as we saw, touched upon this line, bounced up, came back down, up and down, up and down, and generally did not break past this level of support. Here is another example. So this is Compound US dollar. So Compound is a lending protocol. It operates on Ethereum. It runs on the Ethereum blockchain. It has its own network, its own currency. And here we see, particularly in late September into October and into November, Compound had a hard time. Here we see, notice how price has a hard time falling below $287 in this particular month. Particularly in October, there was this repeating pattern that was really different from many other coins at this time. This was a really interesting price action pattern, and we particularly saw this repeating pattern of just bouncing up and down, up and down, up and down, and ultimately Compound would break out of this pattern for a short term into November, but for a good month or so, it stayed in this repeating pattern and repeatedly failed to break past this level of support, this $287 level, where we saw multiple instances, 1, 2, 3 defined instances of price coming down to this level and being rejected, essentially coming down to it and then retracing back upwards. Now, on the flip side of things, we have resistance. So to counter the support level, Resistance is a level where the price of an asset repeatedly fails to surpass. This price ceiling, if you want to think about it like that, it can be caused by a large amount of sellers in that price area. Traders can see resistance levels and expect that the market will sell off as the price reaches that area, and see it as this level that can only be passed with meaningful buying pressure. So just like support was at the bottom and price would come down to it and fail to fall below it, traders see that and expect that level to hold. Traders can also see resistance levels above price, where price is coming up to it, and let's say this is our resistance level, price is coming up to it and it is rejected and comes back down. Price might come up to it again later, it's rejected, and it comes back down. Once again, we want to consider at least 3 or more previous highs when claiming a resistance level of significance. We want to see multiple instances of price coming up to that level and failing to surpass it. And that's what we can say, yes, that's a significant resistance level compared to other levels that may just be made up of maybe 1 or maybe 2 highs at the same level that where that is not necessarily as supported as something that might have 3, 4, 5 instances of price failing to surpass it. Once again, the more historical references to a specific price range, the stronger and more reliable the level of resistance will be. So here's our example of resistance. So let's say price started in this top left area and it came down, comes back up, attempts to surpass it. Didn't quite happen, right? We saw it particularly here. We saw the candle opened here, closed here. We saw the next candle open here. And at some point, we do see a wick coming up to this line. So at some point, price did attempt to come up, but ultimately was rejected because we closed down here, right? And we see this occur multiple times on this chart and in this particular example. So we could say that this particular level is a significant level of resistance. Here's an example of resistance. This is found on the Uniswap chart. This was in November 2021, December, and into November, December 2020 into January 2021. We repeatedly see that Uniswap failed to meaningfully surpass the $4.25 price level for almost 2 months. Right? And there were multiple instances of price coming up to the level and being rejected downwards. Price comes up again and manages to produce a more significant push above it. We do see a candle close above the line of resistance here, but would ultimately continue up and produce an even higher high, but ultimately would fall back down and produce a close below the line again. And here's where we start to see things begin to shape up. And what we could say is that, interestingly enough, overall we were seeing these elevating lows. We see the lows start to begin to raise. Right, here's a low, another low, another low. But ultimately, the support and resistance held true here for quite some time, for literally 2 months. 1, 2. We could argue this one is another instance of resistance holding, as we see this particular candle has an extremely long, extremely small body, and compared to its wicks, which really make up most of the candle, particularly on the upside and somewhat on the downside as well, showing a lot of price volatility in regards to where it opened and where it closed. We do see, once again, ultimately another instance of rejection. We do see overall, once again, the lows once again increasing, and then going into the new year, into 2021, Uniswap does overpass this 425 mark. And to recap, this is just an instance of resistance and support. Once again, support is on the bottom. Multiple instances of price failing to break past or falling below this support level. It's this price floor. Resistance on top of price action, and this is our price ceiling where price fails to overcome or go above the level. So there are numerous things to consider when taking support and resistance levels into consideration, such as the number of touches. As the price of an asset tests support or resistance more often, that level becomes more meaningful. If price keeps bouncing off a specific level, more traders will take note and plan accordingly. If everyone expects the same support and resistance levels to hold, it becomes a self-fulfilling process, right? If everyone thinks Bitcoin is going to fail to break past 42K, Bitcoin will probably do that because everyone has their buy orders set at 42K. So it really becomes self-fulfilling, whether or not if the levels themselves are important or psychologically they're important to people. But if people are planning and planning their trades and planning their orders, remember, for every person that is selling, someone has to buy. So and vice versa, if someone's buying, someone has to sell. If people are setting up their orders at these key levels because they expect them to hold, it becomes self-fulfilling. It becomes a thing that actually holds true, where 30K is a hard place for Bitcoin to fall below. 40K is a hard number for Bitcoin to break past. 42 is another significant number as well. We also want to consider the price action leading up to the touch. So what was happening leading up to that particular rejection from the upside or downside. Any sharp decreases or increases in price may be denied by a strong support or resistance level, whereas a slower, more gradual price action may break through these levels. So if things are just ramping up way too quick, a strong level of resistance or support may hold true and may be much more of a significant hold or a significant level to counter that sharp volatility in price, compared to a more gradual approach where price action is gradually breaking down or gradually breaking upwards. That will more likely lead to a breakthrough through these levels. We also want to consider volume. So if there are increased levels of buying or selling at a specific price point, that level of support or resistance can be considered to be stronger. Traders may remember these historic price levels and plan their trades around them, further reinforcing those price levels. We also want to consider the time or how long these support and resistance levels have been in place. So the longer a support or resistance level remains intact without breaking, the more significant they can be. They can be interpreted to be, I should say. If, let's say, Ethereum has struggled to fall below the $3,000 price level and has multiple instances of that level being tested over time, whether that's in months, days, months, weeks, years, and it repeatedly fails to, the price of the asset repeatedly fails to fall below, let's say, that 3,000 level, we could say that, hey, that's a really significant price level. Realistically, it gives us the idea that, well, this is well tested, it's hold true. It gives further credence to the idea that it really will take something very significant for price to either break below or break above that level.